This is a bonus session. It's about accounting's new normal, and I want to share with you kind of the journey accounting has taken and some of the tools that if you want to stay agile for your future, you should be learning or put on that to-do list of what you want to learn. We learned that the Industrial Revolution gave us not only the income statement, but the certain accounting concepts. Concepts like the going concern, the business keeps going, that there are business entities such as sole proprietorships, partnerships, and corporations, that we need to measure what happens on the income statement, the net income, revenue minus expense, and we also need to expand that balance sheet for corporate concepts, such as there is resources contributed or contributed capital. That's the stock that outside investors buy, and so they're contributing capital to the running of that corporation. Retained earnings, that's the internally generated ownership through the retention of profits into the business. And dividends. Dividends is what you pay as part of the profits of the business out to the stockholders at the end of the year. And you may or may not do that, but those are the concepts that we learned about from the rise of the corporation. We also learned that because there's big buildings, because there's equipment, that we depreciate those. We amortize intangible assets such as goodwill, patents, copyrights, things that you can't touch but have value for more than a year, and so you have to spread their value over their lifetime. So you amortize intangibles. And depletion, we deplete natural resources, things like oil, natural gas, bricks, clay, those types of things you deplete. So again, we need to take that cost of that limestone mine and spread its value out over how many years you're going to deplete it. So those concepts arose out of the Industrial Revolution. Also, because we have shareholders, because we had schemes and scams and stock market crashes, all of a sudden the shareholders said, hey, I want an external third party looking at the financial reporting so that I have some level of assurance that it's not a scam. And so the rise of auditing happened. And so now financial statements of publicly traded companies are audited every year by an outside accounting firm. Also, because you're having these records and you have balance sheet and income statement accounts, you can start saying, hey, I wonder how much that product costs. So the rise of what we call managerial accounting, which you're going to study another term, came to pass because you wanted to know how much does it cost, whether it's a product, whether it's a service, how to allocate the costs effectively, how to budget. All of those things arose out of that business got big, it got beyond a single trade, and so we needed more information, and that information was locked up in accounting heaven. And if anyone wanted information, they had to go to the accountant and ask for the report or ask for the information. But that all changed with computers and with the internet, because we all now have computers that we carry around that are on our desktop, and that data is accessible to us 24/7 via the internet, via the cloud. There's mass quantities of data, and thus it's called big data because it's not just financial information. Because of that, another financial statement came into being, and that was called the CIS, or Comprehensive Income Statement. We'll also call it the OCI, where we're looking at not just the revenues and expenses, but the creation of wealth that year, that it can come from places outside the income statement that are wealth generating. So that's the new statement that we're going to add. So regardless of today, tomorrow, or yesterday, what makes sense for business is what information is important and the point of view of who's telling the story. Am I in my books? Am I in your books? Or am I taking what we call the helicopter view, where we're spanning entities, think supply chain, that we can look into each other's books for certain transactions, for certain information. So it's very important to think about, what is my perspective? So accountants are still the storytellers, and we still bring meaning to data through the process of understanding the concepts and the conceptual framework of what are we trying to do here, applying the best accounting tools possible to analyze and make those business decisions. To put it another way, ALLO stands for Assets, Liabilities, and Owner's Equity, and so ALLO is basically the accounting equation. And back 500 years ago with Luca Pacioli, he came up with the Summa. And the Summa basically laid out the rules of basic accounting. Think traders, think the Italian Renaissance. Oh, fun fact on him. Luca Pacioli had a roommate when he lived in Milan. And his roommate, he taught perspective. It's a mathematical formula. So because his roommate understood perspective, it enabled him to paint a painting in a monastery in Milan called the Last Supper. So you could say that accounting enabled modern approaches to art because there was perspective. I know it's bad, but I think it's a fun fact. So assets still equaled liabilities plus owner's equity then. We then fast forwarded, we had computers, we started keeping accounting on the computer. We kept our books up in accounting heaven, and we had documents that we kept in journals and ledgers, and yes, they were electronic, and outspit the financial statements 3.5 months after year end. And assets still equaled liabilities plus owner's equity. Enter ERP systems. An ERP system basically took those legacy computer systems and they started bolting other processes and other information needs onto these legacy systems, and so then they were called enterprise resource process systems, or ERPs. And these ERPs continued, and they were big and behemoth, and you paid lots of money to certain software and hardware companies to maintain your ERP systems. And because of that, we kept asking for new things, and they were all coded, and we could do costing schemes and all kinds of things like that. So that was all inside the business. But then we started saying, hey, my computer can talk to your computer, and I can use my ERP system to not only generate a financial point of view, but other points of view that would be useful in a supply chain. So my computer will talk to your computer for supply chain management purposes. And it was very useful because we took people out of the equation. It became automated. And what we're moving to now is my computer, your computer, and we have different sets of books. We are now starting to merge our sets of books, not everything, but certain pieces of our books into a collaboration space called blockchain. So that's kind of another way to look at it. Still, here's the computer side of it. We had mainframes, and then mini computers on our desks, and then we had client servers where we kept them in servers that were off-site, and then we web-enabled everything, and now we're in a situation where in what we call cloud computing, where it's real time. We don't have to wait anymore. Data is super cheap. It's so darn cheap that we're overrun with it. So, what are the disruptive technologies that are facing us today that are going to shape and change the way we work? Well, remember that big old ERP system with everything clamped on it? Well, we tried to clamp even more on it because not only did we have cloud computing, but we have cloud analytics. We want to take lots of data and make sense of that data and mush it all together to give us insights. And if you think about analytics, there's really four kinds. There's descriptive analytics, which tells what happened. And accountants are really good at looking behind us and saying, well, that's what happened. We're also pretty good at diagnostic analytics. Why did it happen? In other words, we're still looking back and we're saying, well, what happened and why did it happen? And so maybe then I can be strategic about looking forward. But where we're moving now is what will happen, which is called predictive analytics, which are looking at the lead indicators of business. Can you tell me what's going to happen? Can you tell me what the next black swan event is going to be called the coronavirus? What's going to happen and how will it affect me? And then the final dream wish is to figure out how we can get analytics to tell us how can we make it happen. So think about when you shop on Amazon. Aren't they always promoting or telling you what else you need? So they're trying to prompt you into making that additional sales add-on. They're trying to look at your behaviors of the past and predict how you're going to behave in the future and enable you to do it as well. So this is the state of affairs right now, and we're right on that line between looking back and looking forward, and he who can look forward the fastest and can optimize the foresight is going to win. So, to look at it a different way, accounting has been telling the story and it has been focusing on transactions. This piece, transactions. But there's data coming from all over the place, not just the accounting systems. We have IoT, Internet of Things, the sensors that are on your refrigerator, your watches, your phones, everything has sensors. Your car has sensors built into it. There's all kinds of data that is being funneled in along with social media into the secret sauce of the blue picture, the prosperous society. And until now, we in accounting have focused on the lag indicators, the beautiful financial statements, the balance sheet, the income statement, the story of what happened before, not what's going to happen. And where we're shifting our focus is to look at the lead indicators, the non-financial performance metrics, so that we can talk about what's going to happen, to create better strategies of business for our businesses. So, what does that mean? What tools have we been using? We have all become Excel junkies. we are really good at Excel, and that worked out really well with our ERP systems. But there's a flaw in Excel, and that flaw is Excel can only handle 1,000,000 rows and columns. Big data is big. Big data is more than 1,000,000 rows and columns. And so we need other tools. And those other tools that started arising, 8, 10 years ago are data visualization. Tableau, Click, TIBCO Spotfire are all in this sandbox of telling the story about data that may be financial, may be non-financial, but the important thing is it allows us to analyze, predict, and recommend. It just doesn't report on that computer over there that has the Excel program on it. So because of this, because it's cloud-based, and data is cheap, the total cost of ownership, or the TCO, is a lot lower. It's much, much cheaper. And it uses real-time databases. So everything is real. You don't have to wait for the system to update itself at night. It's ready. Well, that's nice, but what else? Well, this is a nice Microsoft graphic, but it kind of tells the story. It tells the story about that we have all this kind of data that is coming in. And the first thing that has to happen is the data needs to be able to talk to each other. And that is called data cleaning or data cleansing. And that data can be number data, non-number data, textual-based data. It can be coming from business apps, from bots, from custom apps, from IoT sensors, or from your accounting system. But you've got to clean that data and then house it in data storage, which is fondly known as the data lake. And that data lake has sewage coming into it. It has clean, pristine data, but you gotta make it all work together. All that other data also has to be cleansed, coming from other sources, and that cleaning can be done by self-service or IT. Now, once you have that data, that big data sets from all over the place, you start saying, well, gee, I wonder about, and you start getting a data appetite to ask not only good questions, but better questions, because the data is there to look at, manipulate, and divine what you should do. And that first piece was that human computing. That's the Excel. That's the data visualization that is used for decision making by people because they have the computers or access to the data on their desk. There's also some automated systems which is starting to use machine learning, where if you can give AI, artificial intelligence, enough examples of what's normal, the machine can learn what's normal and can do it, versus deciding what is not normal and kicking it out as an exception. So we're starting to automate our processes by using machine learning. And ultimately, we're going to get to cognitive computing, where everything is automated and my computer talks to your computer and everything is automated. Think blockchain. It's an example of cognitive computing. So self-service, that means you don't have to go to accounting heaven to make those decisions, to use data visualization. You are in charge, not the accountants. The others, you need a bit of accounting involved. All right, so with data analytics, you've all been sitting there going, well, what is data analytics? Well, data analytics is basically a series of processes or a series of steps. And each of these steps, you need different skill sets. So the first step is to discover the data that you need to answer the question you want. The second step is to organize that data, and that's sometimes called ETL, or extracting, transforming, and loading data into that data lake so that the data can talk to each other. The next step is enhancing the data, and that's creating the information models, the business intelligence, the smart systems that you're able to glean what's going on. Then going to analyzing data and business intelligence, and finally the reporting out of the data where you can make good business decisions. So we've talked about data visualization, and data visualization is the telling of the story at the end, and that's what we've been doing the longest. While you are a student, you can get Tableau for free. If you need the information on how to do it, I will be happy to share that with you, but Tableau is free as long as you're a student. Excuse me. The other player in data visualization that does that and some more is called Power BI. Power BI is a Microsoft add-in, so if you have Office 365, if your system administrator enables you, you too can have Power BI, and it too does data visualization. Both of these tools are great. Both of them are free for you because of the other software that you have, or because you're a student. So that's starting the seedling in telling the story through data visualization. The two main players, Tableau and Power BI. When you get to ETL, or organizing and enhancing data, sometimes it's called cleaning dirty data, sometimes it's called data wrangling, but the main player here is something called Alltracks. And Alltracks allows you to take all kinds of data and clean it so it can talk to each other. And as you can see, you can get a 14-day free trial for Alltracks if you want. Also, Tableau has tried to enter this realm as well, and they have a program, again, it's free as long as you're a student, called Tableau Prep. When you're analyzing, organizing, and enhancing data, usually you use Python or R. The ways that I've seen people learn Python the easiest is through the use of Jupyter Notebooks. And what Jupyter Notebooks allow you to do is it gives you the piece of code, and in English it tells you what that code does, so that you're able to go through the processes, and notice it's open source, and you're able to understand how to do the data cleaning, the transformation, and so on, because the processes and the code are side by side and you can see how to do it. So that's Jupyter Notebooks. If you're interested in R, they use, to get into learning it more easily, is something called Tidyverse. And Tidyverse is a collection of R packages that, again, gives you everything you need in order to use R effectively, but not get totally bogged down in the coding. So those are the two ways that in accounting programs I've seen them add Python and R to the curriculum. Well, because we have such a mess with those ERP systems where everything has been bolted on, all the processes, or most of the processes, need to be reimagined. And the tool that is arisen and is very useful is called RPA, or Robotic Process Automation. You may hear people talk about building bots. This is building bots. So using the RPA, or machine learning, I am able to transform my ERP mess into more streamlined processes, and I'm able to document those processes. Now, RPA is especially useful when it's rules-based, not value-based, and that there's a lot of transactions. So the machine learning can happen because there's a lot of examples of what's normal, and that the rules remain fairly consistent over time. And notice the data comes in digital format. So here are some examples of what is being transformed with RPA. Your AP stands for accounts payable systems. AR stands for your accounts receivable systems. Credit card processing, bank recs, month-end closing, adding new accounts. You have interacted already with AI and RPA every time you fill out a form on the internet. So what are the, so the major players, what has happened lately is we are starting into process mining. And process mining, instead of looking at flowcharts of the processes, are looking at event logs. And event logs basically keep track of every single click that someone has made into your system. So by looking at the event logs, you can tell how people get their work done. And that's called process mining. And the emerging leader in this area is called Solanus. And Solanus allows you to track and improve your business processes through AI and machine learning. Now at the bottom of this slide is something that you can do while you're getting your master's degree, and that is learning about process mapping skills and knowledge using the COSO frameworks. IC stands for internal control, and ERM stands for enterprise resource management systems. So what the COSO controls allow you to do is understand where the controls should be. Where should you be watching, because that's where fraud can happen. That's where people don't follow processes. And so what you see on the left is the internal control cube of COSO of how do you track and make sure that your systems are secure. The ERM takes it a little bit further than that because it looks at the whole process and includes the strategy. So the last thing I want to talk about is blockchain, because not only are we looking at how accounting is done in our ERP systems and the way it's always been done for 500 years, but we're looking at new ways of doing business, new ways of keeping our record keeping and how we secure them. And blockchain has been the big player in this area. And there's three things I want you to understand about it. Number one, what is a crypto asset? Number two, what is a smart contract? And number three, what a blockchain enables you to do. Now, when I talk about blockchain, I'm not saying you're going to do everything in your business on blockchain. Most of the blockchains nowadays are called permissioned blockchains, meaning you know who you're playing with. You know who's in the group. You're not just doing crypto asset trading with God knows who. These are permissioned, these are closed blockchain systems. So let's take a look at crypto assets first. A crypto asset is something you already know. It's a digital version of something. So if you think about your money, your paper money is a tangible asset. But all the other forms of your money, other than paper and coins, are the crypto expression of a US dollar. So as you can see, only 11% of the US dollar money supply is in the form of paper and coins. The rest of it are crypto assets that are kept in banks, and you trade those digitally. What a crypto asset is it gives you title to the property, and where it's really becoming in use is in the area of art, because when you have an art auction, they don't want to haul the piece of art to the art auction house. Instead, they just want to say this asset exists, it's in the vault over here, and so on. Other places crypto assets are starting to be used is in vital statistics, death certificates, birth certificates, marriage licenses. If there is one instance of that, then you don't lose it. That there is one instance that everybody can access, it can't be changed, and it's there. Real estate. You all, when you buy real estate, you also have to get title insurance. And the reason you have to get title insurance is you have no assurance that you have clear title, or that the seller who's selling you this piece of real estate is really the owner of it. So you get title insurance. But if you kept all your real estate transactions on a blockchain, then you wouldn't need title insurance, because there would be clear title, and there would be a history of that property and everybody who's owned it and sold it and bought it over time. The other big area is with stocks. Stocks are mostly digitally traded. Um, there is a lot of lawsuits every year based upon who owned the stock. You thought you had given it to Aunt Susie. Aunt Susie gave it to Cousin Jenny, and nobody knows who owns the stock. And the other places that you see this is with medical records, when we go to online virtual medical records, car with the VIN numbers, if those can be kept in a blockchain, so much the better. And another place you'll probably see it is with official transcripts, that one instance, can't change that grade, can't tamper with that transcript. The second thing is the smart contract. So when you have a blockchain, remember the block has both the buyer and the seller, or the buyer and the supplier information. So a smart contract is the legal contract. It tells you the steps of the transaction. What date was it purchased? What date was it sold? And the source documents of those, whether it's a purchase order, gets matched to the sales order. When it's shipped, when it's received, again, that can be matched because of these smart contracts. When the invoice is sent, when the invoice is received and paid. All of that information is kept in the blockchain about that one transaction. And it has both the economic information, the contracts, and the accounting all in one place. And it's all automated, so everything gets triggered when these matches occur and the payment can be sent. So when we look at blockchains, again, we talked about my books, your books, now become our books in the distributed ledger. And that allows us to have everybody's set of books is the same set of books, instead of having to go through a middleman like a bank to validate if things happened. What this allows us to do from a security standpoint is, instead of creating the firewalls at the business entity level on your server or my server, the security for each transaction is at the transaction level, at the block. So you can't get into that block of information unless you have permission from both sides to view that transaction, to interact with that transaction. So the roles, rights, and responsibilities are set at the transaction or at the block level, not at the firewall of the servers of the company level. So it makes it a lot more secure, and you can't get hacked, because if you were trying to hack, you would have to hack every single transaction, not just the company. So we've talked a lot about skills that could be yours beyond Excel. We've talked about data visualization with Tableau and Power BI. We've talked about ETL with Alltracks or Tableau Prep. We've talked about learning Python or R and how the easiest ways to learn them. We've also talked about RPA, and the major players in this area are UiPath, Blue Prism, and the ones we've used mostly in our in the classrooms in accounting across the world has been Automation Anywhere, because they gave it to us for free. Process mining, that's a great skill to have, because that's looking at your clicks to find out how people are actually doing it, to figure out how processes are actually happening and how to improve those processes. Blockchain, something that's going to happen. It's not going to happen for everybody, but it's going to happen. Number one reason, as far as I'm concerned, is security of data, especially the data that you don't want messed with, the vital statistics, those types of things, ownership. So stay agile. Your key performance indicators are changing rapidly with every new tool that is out there. You are now in the new normal at sunset. And this is a sunray clam. I live in Florida most of the time, and I was walking the beach and I thought, you need this. This is your future. It is bright, it is rosy, and it is yours to craft and savor. Enjoy it. So that was our bonus, Accounting Today and Tomorrow. What role will you play, and how will you use it?